What is accounting? Accounting is the language of business. Accounting provides information for users to make decisions. Accounting collects information about a business, summarizes it, and communicates that information to users of accounting. Now let's look at who are the users of accounting. There are two major groups of users that we're going to talk about. The first one is external users. The second one is internal users. External users are people outside the company. If we look at ABC company here, external users are people that have no access to the company. They don't work there, they have no relationship to the company. They are interested in the company's information, but they are outsiders. Let's take a look at some of the different types of external users. The first type are investors. Investors provide money to the company, so they provide capital. These are the owners of the company. Whatever money the owners or the investors provide need not be paid back. The investors benefit when the company does well. The capital that they provide is at risk, so an investor can lose the capital they provide to the company, but they also benefit if the company does well. Another type of external user is a creditor. Creditors lend money to the company. The money that creditors lend have to be paid back, and typically they also have to pay interest on the money that they lend. So there'll be interest plus the principal amount that has to be paid back to the creditors. Another type of external user are governmental agencies. They regulate the company. Examples of governmental agencies are the IRS, they tax the company, and then the SEC. SEC stands for Securities and Exchange Commission, and they regulate publicly traded companies. Another type of external users are employees, not-for-profits, customers, and vendors. These are external users. We don't really talk too much about them in this class. I do want to point out employees are considered external users. Typically, employees do not have access to all the information about the company. They only have information necessary to do their jobs, so they are considered outsiders. All these external users want to know information about the company. So what the companies do is they issue financial reports called financial statements, and that's how the external users find out information about the company. The set of financial statements are the only source of information for external users. Financial accounting, as you all know, this class is called Principles of Financial Accounting, and financial accounting is the area of accounting that focuses on providing information to external users. So during the course of the semester, we're going to learn a lot about financial statements and what goes into them. Now let's take a look at the second type of user, the internal user. An internal user is somebody within the company. So here's ABC company, and internal users are users who have information about the company. Typically, it's management who are considered internal users. There are other employees who are considered internal users, but not all employees. Whenever we look at other employees, typically they only have access to a limited amount of information, maybe just about their department, that they need to do their jobs. Management typically has access to all information about the company. So when we talk about internal users, we're talking about management. Managerial accounting is the area of accounting that focuses on providing information to internal users. In this class, we're not going to talk about managerial accounting. That is a whole nother accounting class that you will do. That's Principles of Managerial Accounting. and information is used by internal and external users for decision-making purposes. That's it for this video. Please let me know if you have any questions.